After those large moves recently, the chart is still settling down, and under conditions following ideal Fibonacci proportions, the main target would be to close back into the 350s. But these kinds of steep climbs are less likely unless green volume is consistently maintained, at least around 17 million. Such strong uptrends, approximating the spirals, would still encounter overextension, eventually reaching the 350s. For now, in the short term, the market is deliberating in the 320 to 310 range. Failure to clear over this area by the second week of March can lead to a more bearish stance, resulting in focus on the 290 to 283 area as a primary lower boundary. For a larger range, price can drift in while the market remains undecided. A break below this threshold can lead to an acceleration towards 260, especially if it takes place in the first half of March. Such a drop can comparatively take place more easily, with selling volume constantly remaining at around 15 million for at least 3 days.